Hi everyone, Rob B here with Rob D, and you are listening to the Property Podcast. We've already told you what's going to happen this year. We've already told you where to invest this year. But this week, we're going to look at how to invest in 2017.
Yep, we've got you pretty comprehensively covered. We've talked about the why, the where, and now the how. Plenty going on this year. How should you play that? What should you be thinking about? How should you be timing things? We are going to get into all of the major issues in 2017, the ones that we know about, at least, and talk about how to navigate those. So it should be a really good episode, and I'm lucky to have a co-host still because, Mr. B, you are moving on to bigger and better things. I'm impressed that you've turned up today.
I don't know how you can top the Property Podcast, Rob. So let's put that there. We're not top 10 in the business chart of iTunes for nothing. But yes, I've been lucky enough to dabble with a bit of radio recently. I went on once. For some reason, they invited me back on again. And the second time, because I wasn't pooping myself, it was quite fun. So I went up to Liverpool, my local radio station up there, Radio City Talk, kindly asked me to join them. To review the papers. I get to choose this news story, so it wasn't all doom and gloom, which was good. But great fun, great experience. They've got the best office in the world, because I don't know if you know Liverpool listeners, but I know you do, Rob. The tower that you see way up high is where the radio station is based, so wonderful views.
Very cool. Did Old Habits Die Hard? Did you try and take over and just butt in? Welcome, everyone. Welcome to the show. I'm Rob B. Where's Rob D?
Are you trying to suggest I take over the Property Podcast, Rob, and try and butt you out?
Well, this is episode 202. I haven't done an intro yet, but that's okay.
That's not true. I think there was once I let you do it, so come on. How many times do you need?
And while you're up north, I think you're doing some scouting around as well, weren't you?
I was. Very exciting up there, looking for offices. So RMP has an office in London, and very well located it is too. But with so much of our focus and efforts being in the north, we need an office in the north. And for those who've listened to the podcast for a long time, they know that I'm a massive, massive fan of Warrington for its fundamentals. Its transport links, everything is just so good there. So naturally, that's where I'm looking for an office. I could have been biased and gone to Liverpool, or I could have followed the crowd and gone to Manchester. But actually, I've followed the fundamentals, gone bang in the middle of the two, and looking at offices there. We may not end up there, but that's where our search has begun. So that's quite exciting. It's always fun. It doesn't feel like work when you're doing things like that.
No, finally, after all these years, you've got to make an investment in Warrington after talking about it for all this time.
Rob, it's not like you've been lounging around as I've been scooting up to the north and keeping myself busy there. You've been keeping yourself busy.
I have. I've had a really good week. Loads of great stuff going on across the businesses. But also, something I'm trying to do this year is I've blocked out one day of every week, the same day every week, for not having any meetings and focusing on projects and primarily on writing. And as a result of that, I've started making some real headway in my next book, which is about lettings and management. And at this point, I should say a really big thank you to everybody who has sent in their suggestions. A couple of weeks ago on the podcast, we linked over to a form where people could contribute their own tips and ideas. So many people have. I thought this book was going to be pretty much a solo effort with, a couple of little contributions here and there. But I should have known by now, our audience is amazing and I've had absolutely loads. And so the book is going to be immeasurably stronger as a result. So that has really, really helped me out. Thank you to everyone who's done that. The book will be out soon-ish. There you go. I'm not going to commit exactly to when it is, but it's now well underway thanks to everyone's help.
Yep, I am looking forward to that one, Rob. And another thing I'm also looking forward to, because I've got an advanced copy and it looks gorgeous, is the Property Hub magazine, which for those who subscribe will be landing on your doorsteps probably as you're hearing this podcast. It looks great.
Yep, it's a good one. It's got a cat on the front cover. What's not to like? And we're talking about goals and planning a lot. What is not to like? You're going to enjoy this one. If it's your first issue, you're in for a treat. And if you've been with us for a long time, I think you'll still be impressed. I think we're just getting stronger and stronger all the time. As are our meetups, which are coming up next week. First Thursday of every month means it's meetup day. I'm going to be getting out to Stratford in East London and putting in my first appearance at that meetup there. And Rob, you're going to be in Richmond, I believe.
I am. Beautiful Richmond. Big fan of Richmond. I've not been for years. So I'm looking forward to going back and seeing what's changed, which hopefully isn't a lot because it was really nice last time I went. And Roxanne, who runs that meetup, is wonderful. So looking forward to catching up with her as well. So yeah, very excited. If you are in the Richmond area, come and join me. Or if you're in the Stratford area, go and join Rob. But wherever you are, there's a meetup near you. Go and check it out on the propertyhub.net/meetup. And you can find your local meetup. Get along completely free, super friendly, and hopefully you'll agree, super useful.
Okay, so let's get into our topic of the week, how to invest in 2017 and what to look out for. So last year was a busy year. Lots of things being announced, lots of things going on. But this is the year when we're going to see a lot of that actually playing out. The last couple of years have been years of announcements and uncertainty and sort of just starting to see the effects of things. But 2017 is, we are hoping, the year when not too much new, we hope, will be announced, but we are going to start seeing the effects of things that have been announced in previous years. So this week we're going to talk about what those things are and what you should be thinking about while you're navigating them. The first thing that we need to mention, Rob, is something that I know we are both very passionate about.
We are negative media. Oh, you swines. Negative media. It hasn't happened yet, or is only just starting. It's not doing enough to grab people's attention yet. But the negative media thing is something that we are both confident that will really play out this year. Very down on property investment. And that's because London will struggle. And the media is based in London, so therefore the media thinks London is the country and will report that property is struggling. The great thing is that, one, we're predicting it, so when it happens, we're not shocked. But two, the reason why we're predicting it is because it's a fine example of being in a mid-cycle wobble, which we believe we've now just entered in the 18-year property cycle. If you haven't listened to any episodes on the 18-year property cycle, please do. Rob D actually did an episode recently on the Property Geek podcast as well. You can listen to as well on that. But we've covered it multiple times. So the 18-year property cycle is really interesting. But what gets us excited is if it happens, it means that we are right in where we believe where we are in the cycle. And that gives us a lot of confidence because the next part's quite exciting. So while the media gets negative, we get excited. I know it sounds weird, but that's how it works.
Yeah, it is. I mean, I remember trying to buy a property to live in around about 2007 when everyone was at their peak of excitement about property. And it was a nightmare. It was impossible to get anything for a decent price. There'd be so much competition. But then I also remember going out to buy in 2010 when everyone was sort of in a peak of depression about things. And it was brilliant. You could go out and buy anything. So when everyone else is feeling down about property, that is a great time for people who believe in the long-term prospects and, thanks to things like the cycle, believe that they know what's coming next. So probably the biggest thing that's happening this year, and the reason for a lot of this negativity, is the tax changes. The tax changes that we have talked about a lot, variously known as Clause 24, the tenant tax, the Alice in Wonderland tax, the turnover tax. It's got a lot of names. As it's got a lot of names, we thought we'd cover it a lot of times. We're going to put some links in the show notes to all the different times we have mentioned this. We've got a free video course. We've done about 3 different episodes on it. There's a blog post that I've written about it, which has got a spreadsheet and a worked example. So there's really no excuse for not understanding what is happening. This is coming in from April. It's one of those things, again, where you're not going to see the full effect straight away, but awareness, because it's just around the corner now, is definitely increasing. So I said that this was the reason for a lot of media negativity, and that's because it's very easy for journalists to find stories of people who've been in the game for a long time and are now being pushed out of it, or are now finding their tax bill going up horrendously. Very easy to write negative stories about. And to be fair, there is a lot of negative things to say about it. The upshot of all this is that it is very bad news, especially for landlords who've been in the game for a long time. If you're a new investor, it's not such bad news because you can plan for it. Of course, nobody wants to pay more tax. Nobody wants to have to spend more time thinking about tax or spend more money on accountants to try and mitigate the impact of tax, but far rather it wasn't a thing at all. But given that it is a thing, Far better to be somebody new who can plan correctly from the start rather than somebody who's been in it for a long time, got big mortgage balances, which will affect them a lot, got big capital gains tax liabilities, so it's harder to shift things around. Given that it is happening, far better to be new to the game. But if you've been in the game for longer, hopefully you've now been thinking about this for about a year and a half. And so with it now finally just starting to come in April, you will have planned accordingly and you won't be too worried about it.
I think to find some good from this, it's created awareness around tax planning. And actually, it forced me to look at my affairs, and the way I'm now structured means I'm better off than I was previously, because I don't know if lazy is the right word, but it wasn't getting my attention because the tax wasn't so bad, so it didn't get my attention. When the changes were announced, it's like, oh, okay, let me look at this. And now I'm in a completely different tax vehicle for my property investment than I was before. All completely legal, but far more efficient for me and my circumstances. So in a way, it did myself, and I'm sure many others, a favour, because they're probably set up more efficiently now. But I think the awareness aspect to this is a good thing. And as Rob said, for those who've recently started or are just getting started, it won't really affect you that much as long as you put good planning in place. Okay, so next up, a more recent announcement towards the back end of last year was the lettings fee ban. So letting agents are not going to be able to charge, well, it seems anyway, it hasn't happened yet, wild fees, like some have, particularly some London agents, to tenants who want a property. So some of the fees being charged are absolutely eye-watering, several £100s to people who want to rent a property. And, if their hands are tied, if they want that property, they can't go to another agent. So the consultation is just about to begin, and the government's announced that now. And once that's announced, whether it's no fees or just some small fees, you might not notice changes immediately, but what we expect to see is the trend of letting agents slightly increasing their fees to landlords over time, because a lot of these letting agents have been able to be competitive because they've been making up their fees elsewhere. So they look like, oh, we can deliver 10% because we're making so much elsewhere. The 10% on its own, I know landlords are probably thinking, well, making a lot of money for nothing, no. But actually, it's hard to make money from that when you've got all the overheads. Agents that are a little bit more efficient, a little more forward-thinking, like Yellow Lettings, will probably be okay because they are modelling their business on a future that is going to happen and don't need expensive premises to run. And there's other agents as well that operate that way too. So I think what you'll see is a lot of high street agents probably struggling to be competitive, but there'll be places that landlords and investors can go to still get competitive rates. But it probably won't be the high streets. But it's not going to happen overnight. It's not like the fees will come in and then the next day everyone's charging 15%. I think it'll be a creep effect.
Yeah, it's something to keep an eye out for this year because even though it's just in consultation, normally when there's a consultation, it just means that we'll wait around for a few months and do what they were planning on doing in the first place. So chances are it's going to happen. We've got a model for it in Scotland. It's probably going to be pretty much the same as that. Therefore, agents seeing this will start to preemptively try to make up for some of that lost revenue rather than waiting for it to bite and then starting to do something about it. So if you are making a new investment this year, and you are looking for an agent for it, do make sure that you thoroughly read their terms of business, because being in the industry, I see some of the chatter around it, and there's lots of talk about the new fees that people are looking to implement for landlords to compensate for the fees to tenants. So chances are lots of agents will be bringing these in already. So make sure if you are investing and you're using an agent for the first time, you read their terms, because I've seen some shockers recently. I've seen a couple of contracts that people have signed. They forwarded me the contract to say, they seem to be charging me a lot of money. Can they do that? And then you read it and go, oh, well, yeah, they can. It seems unreasonable. But clearly the person who signed up to it didn't really understand what they were signing. So property management is, of course, very important. We talk a lot about the investing side of things, which is critical as well. But the management is important. If you're not going to be doing it yourself, make sure whoever is doing it properly and they're not ripping you off in return. Okay, next one. One of the more catchier things to look out for from title is the Prudential Regulation Authority changes, or PRA, which probably still doesn't mean anything to you. Rob, can you explain? It sounds complex. It sounds boring. Basically, all it means is that mortgage companies are increasing their stress test levels. So we all know about loan to value. So that means that if they've got a loan to value of 75%, they will lend you 75% of the property's value and you'll put in the 25% yourself. That's not the only test that they make, though. They also look at the rental income and whether the rental income is sufficient to support the level of borrowing. So if you've got a property that is particularly low yielding, you'll find that, okay, even though the maximum on a product is 75% loan to value, it'll be capped instead by what the rental income will support. So you might only be able to get 65%, say. So this stress test, the rental cover test, is becoming more stringent. Stringent because it's a higher multiple. They're also going to be assuming that the interest rate is higher than it is in reality to prepare for when things increase. And what this means in total is that the amount that you can borrow on a low yielding property will decrease. So that means that investors in the southeast will be affected by this, because if you've got a property that's not yielding particularly well, you're buying it with an eye on capital growth more than the income, you'll probably find that you can't borrow as much as you previously would have been able to, and therefore you'll have to put in more cash yourself, which of course means you can't buy as much and it will affect your ROI. If you're investing in the north or in Wales or Scotland or somewhere like that, you probably won't notice. You might find that applications are taking a little bit longer to go through while lenders adjust to this, but you won't actually come up against these limits. So this is in effect now. This came in at the start of January. There's another round of these changes, which is coming in September. And this affects portfolio landlords. And a portfolio landlord is defined as someone with 4 or more mortgaged properties. So if that's you, then that means that they need to do more underwriting checks on you than they had done previously. And this is another of those things where when it comes in, it's probably going to slow things down because everyone's having to do things they're not used to doing. They'll probably have to update their computer systems. So you might again find that things are taking longer to go through. The deadline for that is September. All the lenders are thinking about it now. So what do you have to do as a result of all this in 2017? Well, make sure that you're looking for properties that have got a relatively high yield, so you won't be limited in what you can borrow, and allow for the fact that you might be asked more questions and things might take a little bit longer as all of this beds in. And if you're not already, we say this a lot, strongly advise using a mortgage broker, because it's always been a tricky field to navigate, but it's just getting more and more complex all the time. A good broker will know about everything that's going on. They'll know which lenders are coping and which aren't. They'll know who's got the best rates. They will be able to sort you out. We don't have any stakes in mortgage brokers. It just seems like the common sense thing to do. If you're borrowing lots and lots and lots of money and you have to pay a couple £100 to make sure you get the best rate, seems like a good trade-off to me.
It does, and that's why we do it. Okay, last on our list is Article 50, Brexit. Okay, so Article 50 will be triggered this year, so we're told. And that will probably create, initially, well, it depends on which paper you read, but maybe a bit of uncertainty and fear. This will spook some amateur investors, well, we expect that, but actually the effects of a Brexit, hard or soft, will be felt years down the line. It's not going to make an impact this year. It will in the newspapers, but in terms of property investment, it won't actually make an impact. So you'll hear about it, you'll hear a lot about it, but actually, from a property point of view, don't expect much change. And actually, in the medium term, I think the government will make sure that the economy is strong, probably through fiscal measures that will, in the long term, hurt us, but in the medium term, will make sure, because they'll want to show it's working, that the markets are doing well, that the property market's doing well. So actually, short term, not a lot. Medium term, this will probably be one of the key triggers, and we talked about this a lot, of the rapid growth at the last part of the cycle, because the government will make it happen. That and all the other things we've talked about in the past of why it'll happen. And yeah, I don't really think this one will have much substance this year, but you're just going to hear a lot about it. So that's why we've mentioned it. So things to look out for: negative media, tax changes, lettings fee ban, PRA, and Brexit Article 50. So lots happening, but what should you be doing, and how can you even prosper from all this?
Well, this seems to be a good time to get in my weekly London dig. Avoid London, I think, is the first thing to do.
We're going to get in trouble.
I know. And this isn't because I hate London. I live in London. I like it very much. But it's not the place to invest if you are looking for a return on your rental income. The things like the PRA changes that we've talked about and the tax changes and all of this are making it near impossible to get any return. The thing that people still seem to have is this belief that capital growth in London is always going to be stronger than elsewhere. So a lot of people say to me, I want to invest in London. I can't quite make it add up, but I really want to because the capital growth is so strong. Just because that's been the case before doesn't mean that it's going to be the case in the future. It means that it's less likely to be in the case in the future because it's gone so much further already. And we've also talked about news stories recently that show that growth is now, at the moment, actually faster outside London. So as a result of some of the squeezes that we've talked about, tax, fees ban maybe meaning higher fees, mortgage restrictions, all of this means that you're going to be needing to look for income anyway. You can go outside London to do that and you'll probably get more capital growth while you're at it. And while you're doing that, the main thing to remember is your goal. So we've talked about the how and the where, but the why is very important. Why are you doing this in the first place? What is it that you're trying to achieve? Focus on that. Focus on the big picture, focus on the long term, and don't get lost in the noise. The factors that we've talked about, such as the tax changes in Article 50, mean there's going to be a lot of noise, even more than usual. It's very, very easy to get sidetracked by that if you let it. Also, while you're ignoring the media, ignore most of your friends as well. Not because your friends are silly, but your friends, I'm just realizing this could be why I end up sitting alone a lot of the time. Ignore most of your friends because they will be absorbed in the media and they will just be parroting what they've heard recently. Therefore, even if you steer clear of the newspapers and everything else, you'll still get exposed to all that same fear via people you know. So unless they listen to the Property Podcast, ignore them as well.
Yeah, your friend's financial advisor is the headlines. They will just be repeating what they've read and believing it's fact. We've talked about it in depth, that that's not the case. And in fact, you can take advantage of this uncertainty. We started talking about this last year because we felt we were going into the mid-cycle wobble of the 18-year property cycle. Again, go and listen back to all the things we've done on that. But this is the time where you can absolutely take advantage of the market and make some great investments. When I'm putting offers in now for RMP Property or myself personally, if I'm not making the other person cringe and wince when I put the offer in, it's not low enough. You've got to really go low with your offers at the moment because the uncertainty will ramp up a little bit this year. That's good news for people who are serious about property investment. But if you are serious, the other thing you need to do is get your tax affairs in order. There are changes, as we pointed out, and you can maybe put you in a position that was better than before. Fantastic. But you need to assess that. Don't just wait. Don't just let it happen to you. Have a look at where you're at now and what potentially is a better position for yourself. And then, once you've done all that, and you've listened to what we've said, and you've taken advantage of the market, practice your smug face. Because in a few years' time, you're going to need it. You've not listened to the media. You've ignored your friends. You've been brave. You've taken advantage. You've got some great deals. You've got into areas that other people haven't been brave enough to get into yet. We've talked about that in the last few weeks as well. We've predicted what's happened. And to be fair to us, we do get some stuff wrong, but probably 75%, 80% of the time we're right. Sometimes we're a bit early. And you know what? Maybe you can't base all your financial decisions in life on what Rob and Rob say, but we're certainly basing ours on what we say. And so far, it's played out quite well for us. So we're certainly practicing our smug faces, and maybe you should practice yours too.
I think I'm wearing out my smug face at the moment. I'm still basking in last year's predictions. But yeah, absolutely. It is not always easy to be contrarian in the moment. It's very difficult to go against the herd. It's against everything that you're genetically programmed to do, but it is really important. It feels risky, but the rewards are absolutely there. And the best tool to equip you with against all of that fear and all of that uncertainty is knowledge. And we've got plenty of that on the Property Hub, plenty of that in the archives, and plenty more of that coming up this year as well. So you're in the right place.
I think I've finished the comment. If you've been listening to the podcast recently, you probably think, Blumenach, this Rob and Rob, all they do is get excited about property. If you've listened for a long time, you've probably recognise that this is the most excitable we've been about the property market since we started the podcast. When we first started, we were like, come on, invest it. You know, it might be a bit quiet and people aren't really excited about property at the moment, but you should really look at it. Then the market kicked on and we were pretty neutral. We weren't getting excitable. We were saying, remember, it's for the long term. And now the negativity is starting to kick in, or about to, as we're predicting. We're getting excited and we're getting louder about property investment. Take that on board. This isn't just a rah-rah show where every week we bang the drum for property because we're blind to it. We have been cautious in the past. We're just being brave now because now we feel it's the better opportunity. So I think it's important to take on board. It's not like property is always the best asset every single year and always will be. Not the case. But it's exciting at the moment. So don't miss out. Right. Another thing you shouldn't miss out is our resource of the week. And, of course, we'll tell you what's coming up next week, and it's a good one. But before that, we have to acknowledge the wonderful human being that's left us a review. And this week it comes from Mondis, and Mondis says, I've been listening to the Property Podcast every Sunday evening on my long weekly commute halfway up the country to work. There's a great deal of variety of content from the state of the market through to goal setting, to legals, to being a landlord and the associated responsibilities. I've learned a huge amount from Rob and Rob over the last 8 to 9 months, so a massive thank you to you both. Look forward to hearing more from you in the future. Cheers. Well, thank you, Mondis. Thank you so much for your review, and thank you to everyone who's left this review. More 5-star reviews than any other business podcast in the land, and they aren't our friends because we don't have that many. It must be you, our wonderful listeners. So thank you.
I've been ignoring my friends, as I talked about. I've got no friends at all, so all those reviews are genuine, I promise you. But we're greedy. We still want more. If you haven't reviewed the show yet, don't be that guy who comes up to us at a meetup and says, I love the show, haven't reviewed it yet, but I'm going to. Do it now. Do it first. We're more likely to buy you a drink that way. All right, but whether you've left us a review or not, we can't exclude you from the resource of the week. And Rob, you've got one this week called Photo Splash.
Okay, so for those who like taking a photo or two, and I know many people do these days on their iPhone or Android device, Photo Splash is just a fun, free app that I've seen used. Actually, someone in my family, hello Marcus, if you listen, has used a few times. He's taken some family photos and really done some fun things with them. You can change them to black and white, but highlight areas that become colour and have really good standout images. If you use the social media platforms, which I believe many people in this country do, you can use this free app to enhance your images and make them look a bit more fun and interesting. It's free, and I think just because we're celebrating the Property Hub getting social at the moment, we've started up on Instagram, started posting again on Facebook, Twitter. We'll start very, very soon. But because obviously we've been dabbling in photos, pieces of software like this have come in very handy. If you haven't seen us on Instagram yet, have a look for the show notes. We'll link to our profile there, and we'll also link to our Facebook page so you can take a look. And then next week, Rob, we've got a topic where we've gone through 2017, what's going to happen. We've looked at the areas to invest. We've looked at how to invest. And next week, we've got 2017, your property horoscopes.
No, we don't have that.
Oh, we scrapped that one.
We scrapped that one. We thought we'd done 2017 enough now. If you don't know what's happening by now and you don't have a plan,
you're doomed.
You're doomed. You're into You're into February. You haven't done your work yet. Give it up. No, we talked about that plenty. We're going to get back into detailed episodes about things that are relevant at any time. And next week, we're going to be talking about bridging finance. This is something that I have come to know quite a bit about over the last couple of years. One of the things that I know most about it is that people are really scared of bridging finance. It's not something that you want to use in every situation. It's not something for everybody, but it can be a really great tool. So what we're going to do, as I talked about earlier, is help you use information to get over fear. So we're going to explain what bridging finance is, why it can be useful, why you shouldn't be afraid of it, and then when the opportunity comes up to use it, you will be able to do so. So that'll be a really useful and detailed episode. Notepads at the ready for that one.
So loads and loads of links this week. Make sure you go to the show notes, How to 2017. How to 2017. That's the propertyhub.net/how to 2017. Multiple links to the tax changes, courses, blogs. It's all there. Our social media platforms, which you're starting to get onto as well. Loads and loads of information for you to dig in. And of course, we'll be back on Tuesday with Ask Rob and Rob. And as Rob's mentioned, we've already got a cracking episode lined up for next Thursday. So we'll see you then. Thanks, everyone. Bye-bye.
Bye-bye. Thanks for listening to the Property Podcast. For show notes, all our past episodes, and to leave a review, go to thepropertyhub.net/podcast.